Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to the September 13th edition of Basis Loaded with Joe Schmit. I am Joe Schmit, and this episode, as always, is produced by Paige Driscoll and the entire EverAg Insights team. What we do here is break down the latest from the NDPSR report. Let's kick it off this week with the one shining star component, that is butter. This butter number coming in at 266.75 represents a plus 2.5 to the CME 1 week average of 264.30. Now this was a big shift in basis. The CME was down 6. NDPSR barely even lost a penny. So basis in butter moved back above our typical expected 2-cent positive basis. And all of this while we traded 49 loads on the CME last week. Those 49 loads translated here to the NDPSR. This is the only component on this week's report where volume came in higher than expected, surpassing the 5 million pound mark, more than 1.5 million pounds above our expected 3.5 level. All in all, a big win, and as I said, the true star of the NDPSR report this week. Next up is cheese. Starting with blocks, this block number coming in at 201.08 represents a plus 6 to the CME 1 week average of 194.70. Now we were expecting higher than normal basis as the CME dropped 7 and then is back up 3. So this 194.70 is kind of the low water mark. You would expect that sales staggered over a few weeks would come in a little bit higher to that. Plus 6 qualifies. That is anywhere from 2 to 3 times our expected basis. Nothing at the CME to pull basis down. We only traded 3 loads. So again, meager volume at the CME. Plus 6 is really good basis. However, that higher than normal basis came at a cost, as the manufacturer was only able to move 10.8 million pounds, well short of our expected 12.5. So call it almost 2 million pounds under in the block, and this streak of lower sales out of the manufacturer extends to a full 5 weeks now on the NDPSR, as manufacturers are struggling to hit our expected sales volume levels. The story remains the same in barrels, 188.15. That represents a plus 5.5 to the CME 2 week average of 182.75. 5.5 is right in the middle of our expected 4 to 6 cent positive basis. We were able to achieve that basis while trading 2 loads at the CME. So again, meager volume at the CME, but that's not the only place we're seeing light volume. This week's NDPSR volume coming in at 12.4 million pounds, more than 1 million pounds under our expected. So when you combine the block coming up 2 million short on volume, the barrel coming up 1 million short, in commodity cheese, the manufacturer is losing about 3 million pounds of sales per week for reasons that have yet to be revealed. We'll see how things shake out in the future, but right now, positive basis, that's a nice price, but volume continues to limp along. Next up is whey. This whey number coming in at 28.44 represents a plus 2 to the CME 1 week average of 26.30. We traded 11 loads on the CME last week. So light volume on the CME in whey. 28.44 is a nice price. If you go back and look at the August 26 NDPSR whey number of 26.63, you're essentially talking about a 2-cent premium over prior week's average. So the manufacturer was able to call a nice overage over prior week's NDPSR. However, as you've probably noticed, the theme on this week's report is nice basis. The manufacturer able to call a nice sales price, but volume in whey falling below our expected 4.5 million pounds. So whey volume falling off substantially as prices on both the CME and NDPSR have bottomed and begun to trek a bit higher. We'll see what happens here in the weeks to come. Futures calling for higher prices in the coming months. We'll see if prices on the NDPSR comply. And then lastly, non-fat, 113.54. That represents a plus 3.5 to the CME 1-week average of 110 even. 21 loads traded on the CME didn't really translate here to the NDPSR. Once again, falling well short of our expected 20 million pounds at only 13 million and some change. Low volume on the NDPSR on higher than normal basis seems to be the trend on this week's NDPSR report. So this is week 2 of 5 for the September pricing period, currently getting a September Class 3 expiration of 1825, September Class 4 expiration 1875. I put both of those right on the option strike for the option traders. And if you carry out current CME equivalents through the entire 4-week October pricing cycle, currently getting October Class 3 1810, October Class 4 1870. We'll see what they have in store for us in the weeks to come. Until then, on behalf of Paige and the entire Everag Insights team, thanks so much. Talk next week. Bye.